It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast. Now, we say breakfast because we're available to you from 6 a.m. every morning, talking your property news. And if you are a new listener, of course, you can hear us on iHeartRadio, Spotify, Apple Podcasts, as well as Amazon. Well, Saturday has turned up and it is January the 18th, another busy weekend of auctions and opens today. It is probably all happening in your neighbourhood. Tell you something else that is all happening, that is Season 2 of Severance is dropping tomorrow on Apple, and I've been counting down the minutes like a macro data refinement spreadsheet waiting to be filed. Season 1, if you were like me and you got hooked into Lumen's bizarre world, where Mark, Irving, Dylan and Hallie turned the daily grind into a mind-bending mystery. It is the best show on television, part thriller, part puzzle, all brilliant, and so looking forward to watching that tomorrow. Right, let's catch up because it is a Saturday morning with Anthony Landau, Managing Director and Mortgage Broker at Equilibria Finance. Because as we step into 2025, national home values have seen somewhat of a little bit of a dip during the December quarter. This is the first decline since February of 2023. However, the Australian property values still climbed 4.9% in 2024. The affordable segment did lead the charge last year, and we did witness a recalibration with market conditions tilting slightly in favour of buyers, Anthony. So first off, let me ask you, how has your 2025 started for you? And are you noticing any trends or shifts in these new inquiries for 2025?
Yeah, morning, Craig. Nice to be here. And yeah, that was a good introduction there. And that's exactly what's happening is we have seen a bit of a rebalance of sorts. The housing market's been easing essentially since the middle of the year. And what we're seeing is a bit of a rebalancing, to use your language there, between buyers and sellers. Buyers are fundamentally now having more time in the market. There's more opportunities, particularly in some of those affordable markets, albeit markets like Sydney still have a median value of about $1.6 million. So that's impacting decision making. We are seeing a very, very busy start to the year, both with owner-occupiers starting to think about, hey, this might be an opportunity in the next 12 months to purchase something, potentially with interest rates, potentially with more supply on the market. Similarly with investors, with more stock on the market, more investor-grade stock. I think 2025 is going to be quite a busy year for people looking at building their portfolio or getting into the market and upgrading.
Yeah, no doubt about it. 2025, it will just carry on where it left off from last year. No doubt. Now, for somebody who is trying to enter the property market, you know, the Christmas New Year period, things started lining up in their minds. They did some due diligence. What specific advice would you offer them to navigate, especially considering fluctuating interest rates and changing housing trends? Some of those key factors for first home buyers. What should they focus on when selecting their first home or perhaps upgrading in 2025?
Yeah, that's a really good question because there will be opportunities over the next 12 months. It might be an owner-occupier or an upgrader has to recalibrate what they're looking for. It might be a different region, a different property type, but we are seeing more stock and we are seeing an easing in the market. In our view, what's absolutely critical and the type of advice we're giving people is, it's pretty simple stuff in one way, but it's often overlooked, is understand what you can afford and understand what you're comfortable in terms of repayments. So they're slightly different things. Understand your affordability. What's my budget? If I'm at an auction, what's the maximum I can bid at? and what's the maximum I'm comfortable paying in terms of repayments for my personal budget. Then the second part of it is get yourself a pre-approval in place. Be ready to buy your property. Work with your mortgage broker to get that pre-approval in place that's been assessed. So when you go to that auction, when you're talking to that real estate agent, when you find the right property, you're ready to purchase it.
So we are talking with Anthony Landau on our Saturday morning. We'll come back after the break and talk a little bit to you property investors. We will do that next.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
And right now it's time for another property tip, and this time we are going into the east of Melbourne. Once again, catching up with Simon Burns, an award-winning real estate agent. Simon, what have you got for us this morning?
I think the best advice I can give is the best research you can do is the research you do yourself. Don't rely on others to do that. There are a lot of buyers agents around. By all means, use them, but do your own research to make sure you're getting the best deal.
Yeah, so when somebody is engaged with a buyer's agent, I think the key thing is just don't automatically assume that the buyer's agent is going to know everything. I think that's what you're saying. Do the due diligence, and then you can talk to the buyer's agent and say, look, are you covering this ground?
Yes, 100%. I feel that like if you've got a buyer's agent and you're very comfortable with them, 100% go with that person. And if they align with what your feelings are and in investing in the market, yeah, look at those people.
Remember, we are not a real estate company. We are 100% all about increasing your awareness and knowledge for buying and selling properties.
And it is a Saturday morning. We're here talking with Anthony Landau. It's another busy weekend. Now, when it comes to property investors, there are many considerations and strategies to think about for this year in 2025, especially with interest rates and rental market conditions likely impacting decisions. So what do you say, Anthony, to those investors looking to maximise their returns while at the same time, and this is pretty important, at the same time mitigating potential risks in an increasingly competitive environment?
Yeah, it's a different mindset for investors. An investment has to be treated as part of your wealth accumulation strategy, and property is a potential asset class. And fundamentally, for an investor, whether you're a first-time investor or whether you're building your portfolio, those fundamentals are the same. You're looking at capital growth, which is the growth in the asset over time, and then you're looking at your rental yield, which is your ongoing income stream on the way through. So both those things are fundamental for any investor, and the core fundamentals of an investment remain the same. Understand the market, do your research around infrastructure, around renters, around the area you're looking at buying an investment property in. Secondly, I think what's really important this year is cash flow. Cash flow has been one of the biggest challenges for investors over the last 12 months with interest rate changes, with cost of living pressures, with increased costs around maintenance and ongoing running costs associated with the investment property. So cash flow remains absolutely critical, particularly for a first-time investor who hasn't had that experience. We're giving a lot of guidance around that's an affordable property. That looks like it's going to have good capital growth. The fundamentals stack up around the rental yields. Let's have a look at the cash flow, because it might be that they're having to put their hand in their pocket month to month to maintain the cash flow, then pick up the gearing benefit at the end of the year. So cash flow is absolutely critical in this environment of relatively high interest rates, cost of living pressures, additional running costs of running an investment property. But the fundamentals, there's more stock coming on the market. There's more investor grade properties. There's good, strong capital growth in many pockets that investors can look at. And rental yields, whilst they have eased, they remain strong fundamentally. So I think it's a good year for investors. They've just got to understand their cash flow, I think, is critical as part of what they look at in their analysis.
All right, so let's take a quick look at the RBA mortgage rate decisions for 2025. Remember, this year we are going to get a few of these. Are we going to get 2? Are we going to get 3? Are we going to get 4? Now, it's a complete guessing game, even though the economists are trotting out how many numbers they think. At the end of the day, nobody really knows when we sit here in January of 2025. Now, Anthony, you've previously said that interest rates are likely to remain on hold. You're picking until at least May of this year. And given the ongoing economic data and these inflationary trends, is there any indication that could challenge, or perhaps it just reinforces your prediction from last year?
Look, I still fundamentally hold that view that we're not going to get an interest rate cut in February. There's two things going on here. There's the political pressure and then there's the economic reality. And we had the unemployment numbers out this week and employment growth remains strong. That's making it harder to push core inflation back to target. We've got a falling Aussie dollar. The dollar's fallen around about 10%, and even the trade weighted index is down about 5%, which is impacting prices and goods. And we've also got our fundamental trim mean inflation was 3.2% in November. Yes, it was down from 3.5%. The December quarterly data comes out at the end of January, so that's going to be important. But I just think those three factors, with such a strong employment market, the falling dollars, CPI, the trim mean is still out of range. I don't think there's enough compelling economic data to give the RBA confidence to make that rate cut in the environment we're at.
Every time that we have the RBA decision, you're right there, hotly ready to tell everybody what has happened, and it just remains to be seen how many of these rate cuts that we get. Anthony, as always, great to catch up. Enjoy your weekend. Look forward to chatting in a couple of weeks' time.
Thanks, Craig. Look forward to catching up then.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips.
I must admit there is a feeling of liberation and slight freedom in not having to front up to that bank on a regular basis. As you can probably imagine, I make documentaries, so it's pretty unusual to own a home when you're making documentaries.
Talk about that process of putting on weight to tell the story about the dangers of sugars, because this is not an easy decision to make, and as we learn during the film, your wife or your partner is pregnant at the time, so you're an upcoming dad.
Yeah, I think in hindsight I probably wouldn't have made the film if I'd known what impacts it was going to have on my body. And the fact that everything happened so quickly, I guess, escalated the whole production. It's when we reached out to people like Hugh Jackman and Stephen Fry. We reached out for more money to finish the film, to get a proper camera team in. All those sort of things happened because my body started to fall apart quite quickly.
We connect you to the best real estate information across Australia. The Real Estate Podcast.